Let's go across to Dipan. Dipan, from a stock market perspective, how do you view this? Adani Group stocks clearly will start off quite buoyant this morning. Among the names, what's on your radar? We have a Morgan Stanley note as well. They have initiated coverage on Adani Power and they are sounding quite optimistic about the prospects. What would be the pick of the pack?
Good morning and thank you for having me on your show. I think certainly lifts a cloud on the Adani Group companies and some of the FIIs, especially foreign investors or even some of the more conservative domestic institutional investors who may have been holding on to maybe buying Adani shares because of this ongoing investigation, because of internal reasons. Now, I think that opens the pathway for them to look at Adani in more positive light. So certainly very good news from that point of view. And the management also has been trying to engage and get more and more institutional investors into the company. That's not been of the issues with the ownership pattern. And this certainly will help in that particular endeavor. Having said that, I think first the disclosure we and our clients are invested. I think of all the companies, they're still trading at a lot of expensive valuation, but I feel that from a risk return profile and reasonableness of valuation, Adani Ports and SEZ certainly is the most attractive, according to us, amongst the Adani Group companies. And it's now become a giant in the entire port and logistics industry. And as and when India's trade grows, I think they'll have a bigger part of that particular, entire journey. And also, I think a lot of the new ports which they have acquired, gradually those will start contributing more and more. And it's a great operating leverage business as well. So I think the assets are on the ground. It's a matter of the returns coming through.
Adani Enterprises, though, is much below the pre-Hindenburg price. If you pull up a 5-year chart, around January of 2023, which is when the Hindenburg allocations came to light, the stock was around 3,700, 3,800. And now today, the current market price is about 2,400. So that stock has not recovered, while many others, like Adani Ports, for instance, has zoomed past. Pre-Hindenburg, 2.5 years back, the stock was at 700, 800, and now I think it's close to about 1,400. So the others have done well, but I think Adani Enterprises, Adani Green, etc. are still not quite recovered to those levels. Dipan, what about Cohance? That was the stock yesterday. Now, two sets of news, one that formed 483, the 6 observations. But secondly, yesterday the stock was under pressure because of the large supply which took place. But the fact that it got upsized shows the kind of interest in Cohance. I mean, how would you weigh on this particular stock?
See, Rima, first of all, good morning. There's a lot of interest in CDMO companies, and there are certain secular trends and very strong tailwinds helping the industry. And it's one of the clear beneficiaries of China Plus One, and I believe there are certain regulations also in US which kind of benefit Indian CDMO companies. And Cohance and Dishman, Blue Jet, and also there is OneSource. I think these are the companies which are in the investors' focus. Cohance has been a great performer. Again, disclosure, we are invested in the company. But its performance has been erratic and last few quarters have been a bit disappointing. But I think the future prospects are great because the number of requests for proposals which they are getting, inquiries which they are getting, management has said it has gone up significantly, almost doubled in the past few months or so. So I think corrections, as when they come in a company like Cohance, I would view them as positive. And I do feel that it's one of the solid players, strong players within the entire CDMO ecosystem with the merger of Cohance and Suven. So very positive on the stock. But these things are part and parcel of the risk factor, these 483 observations. So I think that's one thing that investors have to look out for, and it's definitely a risk factor. But I wouldn't go by just the valuations. I do feel the prospects are great, and I would look at such a company more positively.
Talking about valuations, the question is urban company, 25,000 crore in terms of valuation. The top line is, 1,100, 1,200 crore rupees last year. It's just broken even. I mean, what kind of valuations do you play? It's had a solid debut. It followed up with some buying yesterday, up 2%. But at what point, if someone wants to get into urban company, what would be an attractive level?
Rima, that's a tough one to answer. But first of all, we have also bought on listing as a measure of disclosure. Okay. But I think that, the approach that we are taking is to, just buy a small quantity and just wait and watch and maybe average if the stock price goes lower. See, urban company has the benefit of all the great work done by some of the other platform companies, the likes of, say, Paytm or even Swiggy or Zomato. And these companies also got listed with a lot of fanfare. Then there was a correction. We had losses for a few quarters, and now all of these stock prices have zoomed up really well. And within India, I think these entire platform-based businesses are one of the new growth avenues for investors. And losses notwithstanding, I think investors are taking a long-term horizon on such companies and buying into them. And these companies certainly have great opportunity to grow many-fold from here. So in same light also, I think urban companies should do well. It's a very strong, aggressive management. Excellent business model per se, no parallel as such. I mean, so no competition per se. And I think they know the business very well. So you just, it's like a leap of faith. You buy it and hold it on for a long period of time, and I think it'll give great returns.
You know, when we spoke to the management, they said last year the total addressable market for home services in India was $59 billion, and they expect that number to rise to $97 billion by 2030. And of that, $10 billion is that InstaHelp, the new segment that they're targeting. And even on Native, it's a very calibrated approach to get into hardware manufacturing. As of now, there are only 2 products, smart locks and water purifiers. As of now, the company doesn't plan to launch more products. They're going to wait, scale this up, get the profitability. So it's a very conscious, calibrated approach. The street seems to like it.